We're now going to move on to the next solo presentation on launching a first or second time impact fund, presented by Arno Gillen. Arno is a partner in Impact SA, and he's leading the fund setup services, including all the analysis, definition of investment strategies, financial modeling, operational and legal implementations. Arno has many years of experience with more than $6 billion invested in a range of sectors over 17 years. Arno.
Thank you. Thank you. Good afternoon, everyone. I hope you're enjoying the second day. It's a bit difficult to be at the lunchtime, obviously, but I hope you'll bear with me. So yeah, we created Impact, which is a consulting and fund management support services company 14 years ago, with intention to actually facilitate, in a way, the life of impact fund initiators. This is, for most of you who have gone through the journey, this is quite a long journey to go through when you are raising your first fund. The second fund is still difficult, the third fund still also, but tackling the first step of the first fund is a very difficult thing. So we've been, we actually support fund initiators through 4 types of services. So first of all, we help them to actually design their fund. So from their concept paper, let's say, to the first close, we guide them through the whole series of steps that they need to go through when they set up a fund. So it's first designing the fund to be actually an actual true impact fund, designing their investment strategy, selecting the right structure to actually being able to deploy the strategy. And once they have the anchor investor around the table, then we actually implement and set up the fund to reach the first close. So that's the first set of services that we've been doing for the last 14 years. And then we've created a few companies to actually say, well, whenever the fund is set up, most of these fund advisors, they're really good at identifying the projects, really good at creating the impact on the ground, but structuring a deal and actually managing a fund, this is a bit of a different story. And most investors will look at the investment advisor and say, well, I really trust you can actually identify the right projects. But for you to manage a $50 million or $100 million fund, this is another story. This is on one side. And the other side is also that regulation doesn't make the life easy for all of these investment advisors. So based on our experience in supporting a dozen of impact funds over the last 10 years, we've created a fund management platform that has a license both in Luxembourg and in Mauritius, so that investment advisors could really actually plug their investment strategy and really focus on their deals and investors while we do the rest of the back office and middle investment. Our aim as a mission-driven company, we're a B Corp based in Luxembourg, is to say the practitioners, the experts that are there to really focus on the ground shouldn't spend their time worrying about regulation, about risk management, about reporting, but should be there to actually create the impact on the ground. So that's why we've created these 2 companies. We also support boards and other larger funds with board advisory services, independent directorship, advice to board of directors of quite well-established DFI-led funds, which we help then other investment advisors to actually implement the best practices that are learned there. And then the last set of service that we provide is connecting the various either investment advisors or investors to the right project. So we're currently developing a set of investment services to connect the 2 sides of the equation. Over the last 14 years, with our team of 40 people based in Mauritius and Luxembourg, we've helped the creation of 26 funds in impact investing in all kinds of investment themes, starting from microfinance, obviously, where we started 14 years ago. And then we went on brought by our major partners into renewable energy efficiency, agriculture, conservation, education, carbon project fund. We're not specifically experts of a specific theme, but more of the process when you actually set up a fund. And that's what makes our, let's say, work somehow efficient for first-time investment advisors. They come with their investment thesis, and then we help them going through the various steps one after the other. Throughout these 26 funds, as you mentioned, the total assets contributed to SDGs is around $6 billion. So we help very tiny funds from $5 million and the largest fund is one now, a microfinance fund for more than $1 billion investing in Eastern Europe. So our partners are starting with the DFIs. We've worked a lot with KfW, EIB, IFC, etc., who initiated themselves new funds. And what they asked us to do is to take, let's say, their investment thesis and then go on the ground and with a consultant to actually analyze the market needs, design a proper investment strategy, and then structure a fund, which is usually structured as a blended finance fund, where you have public money catalyzing private investors. So we started with them, and then based on this experience, we're now more and more moving into more smaller investment advisors, not-for-profits, that are themselves creating their funds. So that's also their first fund, even if some of them are quite large. You see here IDH, the Nature Conservancy, Conservation International. I mean, they are not fund manager per se, but they are on the ground. They see the opportunity. They see the need for financing. So either to find a GP, a fund manager, to actually work together with them to finance their projects, or they spin off an activity. That's what we have done several times for IDH. And all more and more, as I said, we see smaller GP, first-time GPs coming to us, saying, how can we learn from these 26 funds? How could you accelerate actually our process, our 2 years, our 3 years of fundraising our first fund, which is very critical. What we need in the impact investing and climate finance in general is to have more and more of these specialized investment boutiques that are tackling very specific investment themes, because you cannot claim that a generalist fund manager could tackle on one side ecosystem investment in Asia, and on the other side microfinance in Latin America and renewable energy in Eastern Africa. You need very specialized expertise, and that's why the whole sector needs more and more of these investment advisors. The difficulty is for them to start. So that's why we created Impact. So the challenges of the first-time fund managers, when they knock on the door of investors, obviously they bounce back with their concept saying, well, it looks nice, your concept, but I have all of this list of questions. And the first set and the first challenge of most of these investment advisors is that they've seen good deals on the ground, they've seen that this is making an impact, but they didn't look through sufficiently how to present their strategy. So the first thing is the clarity about the impact strategy. You need to differentiate yourself. You need to be able to say, this is how my fund is positioning, what it adds to already the same fund that are tackling somehow the same problem or the same impact. Because most of the impact investors receive hundreds of proposals a year. So you need to be able to, in a few, let's say, minutes, in an elevator pitch, obviously, but also in detail, say how your fund will add in terms of impact and how it will make the difference. So the positioning in terms of the impact strategy is very important. Then the second thing that we just discussed before is the track record. Obviously, you're a first-time investment manager, you cannot show an existing pipeline. So, I mean, it's an endless chicken and egg discussion. So what we try to do is to help some of them to go through a preliminary phase, which is part of the solution, where there are some warehousing facility solutions where you bunch you regroup a bunch of early investor to invest into 1 or 2 deals, and then moving on to the fund model. So the first solution for most of them is to say, let's start with 1 or 2 deals, let's put them into a trust, a light structure or whatever, and then we make this structure evolve into a proper fund, initially into a non-regulated fund, and then evolving to the regulated fund. So once the strategy is somehow, let's say, clear, also from an impact point of view, then comes the other question from the investor. You're fine, I'm fine with your concept, I trust that you can do it on the ground, but are you able to actually run a fund? As I said, it's different from actually structuring a deal in Ghana for off-grid solar and managing a fund with all the difficulties of managing a fund, which is around risk management, around ALM, ethics, governance aspect, reporting, and the actual management of the impact. So for a first-time, people-led investment advisor, all of this is really cumbersome. And what they want to do is to go on the full field, source the deals, talk to the entrepreneurs, and then just have the money flowing there. But the investors will say, look, guys, this is all good, but I want also to make sure that you're following the best practices in terms of fund management. And so in some cases, they say, well, with my 2% of management fee, I cannot be on the ground and also hire a risk manager, hire a compliance officer, do the reporting according to all these standards, etc. This is very difficult for me. So that's the very big challenge for them, that they are forced by the investors to abide by these high-level, high-standard fund management principles. So they need to find a solution. Once they have solved this, still the regulation comes. So on top of what the investor is requesting, now we have our dear friends from the EU, from the various financial authorities, putting even more pressure onto these funds. These funds are small funds, 20 million, 25 million. So as I said, if you're already leaving a lot of your management fee for risk management, for reporting, etc., and on top of it, you need by regulation to have a depository bank, an auditor, a fund administrator, and again leave a lot of your, let's say, resources to pay for all these regulation, then it becomes really a nightmare. And I would say that over the last 5 years, we've seen the regulation, as most of you know, increasing again and again, making the life even more difficult for most of these investment advisors. So the AIFM, so the AIFMD, so the Alternative Investment Fund Management Directive, the intention was really good, saying, well, what the hedge funds did with all our money was really crap, and so we need to rule a bit and protect the investors. All good for the hedge funds. But for our sector in impact investing, when you're running a $15 million fund, it puts so much burden on you as, again, an investment advisor. You want to go into the field and select the deals. So again, most of the investment advisors are lost, and they don't have the resources to cope with all this regulation. AFMD, AML, anti-money laundering, this is a tricky part, obviously, especially in development finance and impact investing in general, and it's increasing and increasing. As most of you know, Mauritius have been put on the gray list of the FATF committee. Hopefully, let's cross fingers, they'll be back into the white list. But it has put a lot of pressure on most of the investment advisors because they couldn't go into Mauritius where the experience plus the efficiency of this domicile to set up a fund was put at risk because of this new regulation. But AML is also a very increasing issue also in Europe. And a lot of investment advisors spend really a lot of time on know your customer aspect just to comply with AML. So compliance with regulation is getting more and more difficult as well. Substance is the other aspect. In the past, you were setting up your fund in Luxembourg, in Mauritius, wherever, offshore company, and you just needed an address and no need to put people there. Now, all financial authorities require to have presence on the ground, which again adds up to the different costs that you need to put within your maximum benchmarked 2% management fee of the fund, because the whole industry says this is 2 or 2.5%. So again, this is not going into the right direction. And to finish, placement, the placement rules with reverse solicitation, especially for a first-time fund, it's impossible because normally you don't have such a network, so you cannot play with this game, and national private placement rules are becoming more and more difficult. The last one in line is this nice for a sector regulation, which is the Sustainable Finance Disclosure Regulation, which will make the difference between the normal fund, I would say, what we call the Article 9, which do not have any claim to say we are an ESG or an impact fund, the Article 8, which are claimed to be ESG funds, and the Article 9, which claim to be an impact fund. The good thing is that this regulation forces each and every fund and fund manager to not only put targets in terms of their impact targets or safeguards in terms of their ESG management system, but also on an annual basis report on that. So it's very good for investors. They will be able to navigate throughout the various funds and make the difference between the real true impact funds, or the real true ESG funds, and the rest of the greenwashing kind of fund industry. But again, for the fund manager, it's additional work, it's additional burden. So over the last 14 years, we've been facing for our partners, for our investment advisors, we were supporting all these challenges. And we say, well, what can we do? What can we develop to make their life a bit easier? So we've tried to set up a few tools to help them, especially the first one. Even the second time and third time investment advisors come to us for these kind of tools because they want to, as I said, focus really on their deals and their investors and have the rest of all of these challenges being sorted out. One of the initiatives, one thing that I forgot to mention is that obviously throughout all these, whether a strategy, fund management or regulation, the impact is present everywhere. So it's not anymore possible to say that it's just my investment strategy is impactful, but I need through the whole way of how I manage my fund to make sure that it is actually following the impact principles. So all of this obviously increases the cost for operating such a fund, but also increase the length time for raising your first time fund. I mean, I guess you've heard of some of our colleagues here that are attending the conference. They've been working on their fundraising for the last 3, 4, 5 years now. And so that's very difficult for most of them to go through this very long process. Well, they inject their own money, their own time to actually not only design, set up, structure the fund, but convince their investors in this environment. So one initiative that we created in Luxembourg with the Luxembourg government and 10 other private companies, big fours, law firms, consulting firms, is an accelerator. So as I said, we need more investment advisors tackling specific climate or social challenges and designing a new strategy and launching their first fund. So we've created this International Climate Finance Accelerator with the aim to really support these first-time advisors and provide with the necessary support and shorten the time between the idea and the concept of the fund and the first close. So this accelerator that is obviously a joint initiative by various actors supported by the Luxembourg government provides 5 types of services or support to a first-time investment advisor. The first one being a support envelope, capacity building, TA, you name it, money of around 80,000 euro, where the investment advisor could then finance legal, risk management, regulatory impact, ESMS mandate support from consultants, from experts, so that they can at least beef up what they have currently designed and strengthen what they have on the ground. The second aspect is, as I said, as it takes 2 years, 3 years to fundraise, travel, and people need to live and survive during this period. And there is a working capital loan that is provided to these investment advisors that is guaranteed by the Lux government. So first it's kind of a grant envelope for capacity building projects. Second one is a loan. The third support is that we organize a series of 5 workshops where we go through all the various aspects that you need to tackle when you actually set up a fund. So it's about, as I said, legal aspect, governance aspect, regulation, investment decision process, due diligence processes, etc., etc. And we have investors coming, we have fund managers coming, but also consultants that are there to exchange with the accelerated fund, investment advisors. So the program is a 2-year program that accelerates every year 4 new investment advisors that are tackling a specific climate issue. They also receive coaching services from either ex-investment advisors who have been at their place in the past and that have raised already 2 or 3 funds, or investors who have been on the other side and who are still on the other side and guiding them in terms of strategy, how they could approach investors, how they could, in a way, then shorten their fundraising process. And the last aspect is about a desk in Luxembourg. Now, this program has accelerated 20 funds, 20 fund managers, in a way. We had Empower New Energy in one of our previous panel today, and Empower New Energy is one of the accelerated entity there. So it's getting to be now successful, and we see more and more new of these investment advisors coming. The other aspect that we worked on was, okay, when we say it's an impact fund, a lot of first-time investment advisors just say, well, okay, this is my strategy, and it should be enough to convince investors. But more and more, specialized impact investors, not only DFIs, but also foundations, family offices, they start to be really expert in looking and differentiating among the various impact funds. So the positioning in terms of how my fund is actually an impact fund is very, very important. So what we have developed is a tool to actually help the investment advisor maneuver into all these various principles for impact management, PRM principles, SDGs, all the, let's say, best market practices in terms of label principles, etc., to guide them to select what they should follow, actually, because there is a myriad of different initiatives, standards, best practices, toolkits, etc., and they're basically lost, and they don't know which one to follow, and then 6 months after, well, we should rather follow the IFC, ENS standards, and then 6 months again after, that's the EIB, etc., etc. So we have designed a proper tool that in a very quick manner managed to say, well, based on your investment strategy, the type of investor that you're targeting, you'd better follow these kind of principles, and this is the way to actually implement this into what we call the impact management framework. Then the next step is to actually say, okay, all of these principles should be embedded into the way you actually set up your fund. So you would design what we call an impact measurement and management framework, which takes a holistic view on how the fund will be managed, and go through the whole process of governance, investment strategy, eligibility criteria, setting the impact targets, reporting the way you would report on the impact. And so we come with our toolbox in a way and try to help them by providing them examples of best practices, what other investment advisors have done, the types of comment that they've received from investors on this aspect, so that they can adapt very quickly to their own context. So we go through a theory of change definition, the environmental and social monitoring system, etc., which helps them to really have something that is sufficiently solid to knock on the door of their investors. So once the impact strategy is sufficiently solid, then you go into more of the technical aspect about how to set up a fund, selecting your domicile, selecting the legal form, drafting your term sheet, deciding whether you need a blended structure or not, well, the different voting rights, etc., all the technicalities about what you need to actually operate a fund. And, well, based on our 2026 fund, also, again, we come with a pretty standard approach where very quickly with them, we actually come to basically at the design, what we call the design phase, a financial model, an impact investment strategy, a term sheet, and a pitch deck. With these 4 deliverables, they are equipped to go and knock on the door of their investors. Once they have the soft commitment of most of these anchor investors, we actually set up the legal entity for them and make sure that we onboard all these investors and reach the first close. Once the fund is up and running, this is not done. I mean, this is 5 minutes. Thank you. This is not done, so we have now said, well, we have designed a set of services, and we have a team of 40 people doing that to say, guys, focus on your deals, go on the field, talk to your investors, we'll do the back and middle office for you. So it's about portfolio reporting, it's about risk management, it's about compliance, and it's about also acting as an impact officer. This could also lead to some substance requirements that may be coming from the regulators, such as in Mauritius, where we provide people on the ground there to actually support and do some part of these fund management services. So how does it function? How do we provide these services within the organization of the fund? So the fund is set up by the fund initiator, which creates the GP, which has the hand on the fund, on the strategy of the fund. And together with our help, so we will actually create the fund as a legal entity and create the general partner. So how do we provide our fund management support services? So what we have done, we have created 2 platforms, one in Mauritius and the other one in Luxembourg, that are licensed platforms, so that an investment advisor, a first-time investment advisor, could actually run through a non-licensed entity a fund, thanks to the fact that they are under our regulatory umbrella. So in between the fund and the investment advisor, we place what we call the AIFM, the Alternative Investment Fund Manager, which holds this license, and will provide all these regulatory compliance, risk management services to help the investment advisor be compliant with the regulation. So in Luxembourg, it's AIFM, and Mauritius, it's the CIS manager. Our aim is not to do the work of the investment advisor. Our aim is really to say to the advisor, again, go and manage your portfolio, source your deal, manage your deals, create the impact on the ground, be in contact with your investees and with your investors, and basically we take care of the rest. The investment advisor is in control of the fund as long as they control the GP, which is actually hiring the platform that we have set up, whether in Mauritius or in Luxembourg. And obviously, you still need a series of service providers, but with each of these service providers of the various domicile, we also went through a lengthy selection process and have quite cost-effective way of operating, which helps, again, the first-time investment advisor in their process. And I will finish there with another tool that we have set up. Actually, we've said, okay, that's all good to provide these fund management services, but still it takes time to establish the legal entity, to select potentially and agree on this specific fund with some service providers. So why don't we actually set up already the legal entity and just open compartments? So that's the initiative that we have had in Mauritius that is starting now, more forcefully, hopefully, with the reopening of Mauritius from an FATF point of view, but where we have created an umbrella fund where everything is already in place. The legal entity has been approved by the financial authority, so the legal entity is established, has already the various partners, be it for auditor, banking services, fund administration. We provide the licensed fund management so that within a few weeks, an investment advisor could actually really set up their funds, as long as they have convinced their investors, obviously, but just plug their investment strategy, plug their investor, and operate their funds. So this is a protected cell company, for technical words in a way, but each cell, each compartment is fully segregated from the other, so that you can actually add the various funds, and each investment advisor has, the same fund as if they would have created a separate legal entity, but it's faster and it's more cost efficient because you share the cost of this legal entity with all these other cells. So these are just a few tools that over the last 14 years we've developed. We are still working on many other aspects to tackle liquidity issue, exit problem, also supporting, training the teams of these investment advisors. What you've understood, so that our role is not to be at their place, so they are they are the teams and the experts to actually create the impact, but we're here to try to smoothen the process. So we're here to help. If you have any project, if you know anyone who has a project of designing, setting up, and managing an impact fund, feel free to come to me, and I'll be happy to discuss that with you. Thank you. Do we have time for a question or not really? Any question?
Okay, well, if not, thank you very much, Arno.
Thank you.
Please feel free to come and contact him and have a coffee or lunch.